Hey everybody, thank you so much for tuning in on that webinar. Hopefully it was a good resource for you guys and helped you answer some of the questions about sort of the mortgage deferral program, also just to get an idea of what's going on with the market right now. So again, like I mentioned on the webinar, we've recorded that webinar for you. So if you want to share it to your friends and family, it's there for you guys as well. And also Andre has been generous enough to provide an example from Scotiabank, as well as I'll put in the slides about the current market conditions. Okay, so again, if you have any questions about it, feel free to reach out to us directly. And then if you have any friends or family, or even if you're going through something, please reach out to us. We'd love to help you guys, during this time. And until next time, God bless. Bye now.
So there's a lot of uncertainty with what's happening out there. And so, in the end, we'll try to provide some resources for anybody in need, so you can share it and just find out any information for yourself. And also, if you guys are going through something like personally, or even like your friends and family that are going through something and we can help, please reach out to me afterwards, like, private message me or whatever. And then, my team and myself will try to do our best to assist you guys. Okay. So really the agenda for today is to answer any questions about the mortgage deferral program, because I've been getting a lot of questions about how the program actually works, and people want to find out if they should actually be utilizing it. So we'll be talking about the current market conditions and what to do if you still need to buy or sell in this market, and whether it's a good time or not. And at the end of it, what we'll do is we'll do a Q&A session. This will allow you guys to have any questions that you want to put up in the chat, and we'll answer it if we haven't answered it in our program already today. Okay, so with that, I'd like to introduce my co-host Andre Persaud. He's from Safebridge Financial Group, and he's an expert in the industry and a good friend of mine. And he's also a Raptors fan. And so I know that basketball season is over, but Andre's been generous enough to donate tickets to some of my clients, so that makes him even more amazing. So Andre, thank you for being on the webinar, bud.
Yeah, no problem. Thanks for having me. Hi, everyone.
Cool. Andre, so, as this COVID-19 epidemic has impacted the economy overall, lenders have been, gracious enough to offer relief in the form of mortgage deferrals. So the format today is I'd just like to ask you a couple questions that are general questions that we're fielding out there. And then also, if you want to add in any more information, then that would be great. Is that okay?
Yes, definitely. Go for it.
Okay, perfect. So number one, can you explain more or less what the mortgage deferral program is?
Yeah, so it was announced, I guess, late last week that the big banks, but pretty much every lender out there is participating in this, and it's really to help out individuals that are experiencing any hardship from COVID-19. So they're offering up to 6 months of a deferral of your mortgage payment. Now, again, this is something that I guess wasn't put out in the narrative. It's for those in need, and I want to stress that it is for those in need of the relief because of job loss or cut back hours or anything like that. But they're offering, like I said, up to 6 months of relief. Now, from the people I've talked to so far, some people are being offered 3 months, and some are offered a month, and then revisit it after a month. But it's really it's different from lender to lender. So for anyone that may need this, I encourage you to contact your lender directly and see what options are out there for you.
Great. So just to be clear, so these are like a deferral program. It's not that they're forgiving the mortgage or the payment in itself. They're just, I guess, either adding it on in the back end, or how does that work then?
Yeah, so there's two ways that lenders can do it. So we'll throw it an example from Scotiabank after this is all done here. But basically, the interest still accrues over that time period. So again, one of two things can happen. When you come out of the mortgage deferral, they could add. They're going to add the interest on to your mortgage balance, and your payment could essentially go up because your balance has gone up and your amortization or the life of your mortgage remains the same. Now, how some other lenders are doing it, so again, option one, not option one, but some lenders are doing it one way where your payments go up at the end of the deferral period. Some other lenders are doing it where, hey, if I defer my mortgage payment for 6 months, it's really just going to extend, my payment remains the same, but it extends my amortization or extends the life of my mortgage.
Right. Okay. And so I think we were talking about it yesterday. So how do the banks, or which scenarios will people be able to choose, or do they even have a option to choose which one they want, or how does that work then?
Yeah, so again, quick background on myself. I've been doing this 10, 12 plus years, and we've never gone through this before, right? So information seems to be coming out daily on this. Sorry, can you repeat the question? I just want to make sure.
We were talking yesterday, right? And so like there was either the option of either putting the payment at the end and raising the amortization, or putting it at the end and then not increasing the payment, so to speak, right? I think what you were alluding to at the end of it was that it's whatever the individual lender chooses, right? It's not like we have choices. It's whatever the lender dictates, right?
Yeah. So from what I'm seeing is it's not, the lenders aren't presenting you with an option of option A or option B. It's they've selected an option that they are using as an institution, and you can take that or not take it. So it's again, that's what we're seeing as of today. But I mean, really, I think the banks are trying to scramble to get their systems and everything in place. And really, they're scrambling just to get a system in place for to put one option on the table for clients. And they just don't have the capacity right now to throw out two options. But like I said, this is evolving day by day, and maybe that does eventually become an option. But right now, from what I'm seeing, is they're going to say, here's what we're offering in terms of the deferral program. Would you like to take it, or would you not like to take it?
Okay, great. And I've sort of experienced it myself, as I've deferred my personal mortgage on my investment property, and we can talk about that in the next question. But if somebody wanted to go through that process, Andre, like how would they go about seeing if they can qualify, or what do they do with their lender if they actually want to utilize that program?
So the communication we're getting from all lenders across the board is essentially call through to your lender now. Call them directly. They're trying to set up certain support hubs to support this program, but you just got to call them directly and ask them the options. Now, please do be patient with them. They're experiencing higher than normal call volume, so I have been hearing from clients that they're struggling to get through on the first try, or they're having to wait on hold for quite some time. But it's just because they're operating with less employees, because they're sending a lot of people home, and they're experiencing, again, higher than normal call volumes. So again, it's just call through to them. From what I've heard, it is a pretty quick conversation that you have with them. One of my clients was telling me that they were only asked, are you experiencing financial hardship because of COVID-19? They answered yes. The call was done, and their application is being processed.
Right. Because I think in the beginning, what the government was putting out there, they were saying, you'd have to go through a qualifying process to see if you can actually qualify for the program or not, where they sort of have modified the program over the last week or so to sort of have kind of a general question and say, are you affected, yes or no? And then they can apply it if you are indeed in need. Is that correct?
Yeah, so I just called through to try and see, hey, what does the process look like? I mean, I wasn't applying for it, but I was just calling through to kind of see what the experience was like. Now, I know with, again, for example, Scotiabank's call center, it takes you through the automated process. And one of the questions they ask you in the automated process before they move on to the next step is, do you press this button if you have your documentation prepared to prove this financial hardship. And so some people are hanging up at that stage because they don't necessarily have anything. What I would say to people is click that, press that button and proceed to the next step. Because, I mean, in all honesty, a lot of people can't get a letter of employment or some sort of document because their HR department is not operational right now. So again, I have had a lot of clients go through with no documentation. I think they're trying to say we're going to do this big, investigation, or we're going to do this big, application process, but I don't think they have the capacity to do that. So the people that I have seen get through the process, it was a simple, quick, on over the phone question and answer period. Right. And once the answers were given that they were experiencing hardship, the call was done, the application is being processed, and away they go.
Right. Yeah, and I can vouch for that too, because in my experience, even when I was applying for it, it was actually relatively easy. I mean, the longest part of that process for me was really the waiting period, like you said, because I was probably on the hold. Put it on speakerphone. I was doing something else, but I was probably on hold for a good 45 minutes before I actually got to speak to somebody. But then once I spoke to somebody, it was a relatively quick process, probably no longer than like 10 minutes, and then it was approved and deferred. And so I guess the question then, Andre, is that a lot of people are wondering, like, should they actually utilize this program? Is it good? Like, what's the pros and cons of this if I do decide to use it now? So, like, I guess the question is, like, how do I determine if I should actually utilize it or not?
So I would say, again, I'd go back to the whole need thing. If you need it, utilize it. If you don't need it, I'd say don't utilize it necessarily. And again, things will kind of progress day by day. But the one thing I would encourage is if you think that you will need it, whether it's a month from now, 2 months from now, 3 months from now, maybe you want to get the process started sooner rather than later, only because, again, we've never been through this before. I can't predict how quickly the application will go through from lender to lender. Now, and again, every lender is going to be different depending on, how much staff do they have working on this? How many applications are they getting for this? And what if it takes them, 2 months to process your application because, again, they're understaffed and overworked? You don't want to get to the end of your line and hey, I can't make that next payment, or we're really getting in trouble, and then you want to apply. If you feel like you're going to need it, like I said, a month from now, 2 months from now, maybe you want to put the application in, or at least try to get them on the phone. I think the phone lines will unjam a little bit for them in the coming weeks as things progress. But the main thing here is, like I said, it's need. If you think you need it, use it. And for those of you who are investors out there, you're going to want to keep it. I'm an investor myself. My wife and I own a few properties, and we watch it constantly, because what if they say renters don't have to pay? Right now they're saying renters do have to pay. But they did put through that whole thing with regards to there's no evictions, or you cannot evict anyone. So what happens if your renter can't pay? Right? We're fortunate. We put our checks in the bank, first of the month yesterday, and they cleared and everything. But what happens if we get a month from now, 2 months from now, and you own those investment properties, and your renters just come to you and say, we can't pay. We don't have the means to pay. You can't evict them. You can't do anything. So again, if you own in those investment properties, you may want to think forward and prepare just in case they can't pay. Can you make up that payment or not, right? So it's just really trying to plan ahead and making sure that you don't wait till you get to kind of your wit's end and then try to apply for this thing.
Yeah, I agree with you, Andre. I mean, even if people are wondering if they should actually use the program right now or not, I think that, if you don't need it right now, you don't have to apply for it. But if there's a risk of, let's say, you're going to go potentially layoffs, or you might have unemployment, or your job sector may be impacted in, let's say, 2 months or 3 months, it might be prudent just to get on the phone right now to see if you can start the process. Because really, if you look at the cost for the deferring of the mortgage, is it really expensive to do it? Let's say, worst case scenario, somebody decided to utilize it right now, and then what does that cost them on the back end, on the interest side of it?
Yeah, so
and we're using rough figures, obviously. So
yeah, so I think it's not a huge cost. You just have to note that your interest is still going to accrue over that time, and then you're going to be paying interest on that interest,
Yeah.
going forward. So it's not a huge cost. It is a cost. I mean, there is a cost there. I mean, from the calculations I've kind of done, it isn't a huge cost, but again, it's still a cost. So if you don't need it, why take on the cost? But if you think that, like, you're going to possibly need it, again, it's not a huge cost. You're just paying the interest on the interest you're going to accrue over those 6 months or however long you defer for. And then you got to remember, again, depending on your institution, your payment might go up slightly over that when you come out at the end of it. And again, we'll provide some examples for you guys after this call. But yeah, like I said, not a huge cost, I don't think, in the grand scheme of things.
Okay, great, thanks. And so, just for clarity, then we touched about investment properties. So investors out there, are they also allowed to access the deferrals? Because I know a lot of people in the beginning were saying that they weren't allowed if it's an investment property and only your principal.
Yeah, so that I haven't heard that narrative. I've heard some institutions come out and say, we can do your primary residence and up to 3 investment properties. I've heard some lenders say we'll do your primary residence and up to 1 investment property. But I mean, investment properties, I think they have to be included for everyone, because it's what's the true difference, right? I think there's even more risk, or I think more people will need it for their investment property in the instance that, like I said, if their tenants can't pay rent, or if they get the opportunity where the tenants don't have to pay rent, right? So investment properties, as far as I know, with the lenders I've talked to, are being treated the same. It's just, and when I say some lenders are saying, 1 property, they'll do 1 property and up to 3 investment properties. That's just with the mortgages you have with them, right? So if you have more than that, more properties than that, but you have them with a different institution, those don't count, right? So yeah. So as far as I know right now, investment properties are definitely included. It's just how many can you do with each specific lender.
Okay, great, thanks. And so I guess there's another question out there that I'm getting. What about property taxes and other things that are added on top of that mortgage? Is that actually getting deferred as well? Is there any implication of like property taxes that are built into your mortgage? Like how does?
Yeah. So again, I know I've reiterated this quite a bit, but again, it is different from lender to lender. But what I'm seeing, don't take everything I say here as fact for your specific lender. Reach out to them direct. But what I'm seeing is the norm is if your property tax payment is included with your mortgage payment, it will be deferred as well. If you pay your property taxes on your own, as far as I know, you still have to make those property tax payments on your own. If you have mortgage insurance, if you have creditor insurance attached to your mortgage, those payments will still get taken. So not a ton of people, but I mean, if you have life insurance or disability insurance or critical illness attached to your mortgage, that's the one that will still get taken. But if you have your property taxes included with your mortgage payment, those would get deferred as well.
Okay, great. So Andre, is there any other information that would be good to know? I mean, some people are asking, hey, should they refinance or lock in if they have a variable? Like, can you give any insight on that?
Yeah, so it's a bit strange with what's going on. So the narrative out there in the media is that the Bank of Canada is lowering rates. The Bank of Canada is lowering rates, and typically, historically, what we've seen when that's happened is mortgage rates have gone down. So I'm getting a lot of calls right now saying, hey, should I refinance or should I get out of the mortgage I have to switch into a lower rate mortgage? But what we're seeing right now is actually the banks have kind of bumped their rates up a little bit. So, I mean, it doesn't hurt to reach out and ask the questions. It's free to make that call to me or your bank or whoever. It was a good idea, I think, to refinance maybe a month ago. But because the banks are worried right now about potential defaults on their mortgages, potentially people, deferring their payments. The banks are also worried about their own liquidity. And what I mean by that is if people have to start drawing on credit quite a bit, that money has to come from somewhere, and that comes out of the bank. And if the bank is pumping all this money out in terms of credit, and people are deferring their mortgage payments where they're not getting that same inflow of cash, they're worried about their how much, again, liquidity or cash in the bank they have, right? So they've actually been increasing their rates almost daily, to try to make up some of those profits to offset some of the potential losses they're thinking they might experience. So in terms of refinance right now, it's really hard to say. I mean, you might want to refinance if you're really trying to get rid of some debt, or really try to put a bit of a cushion in place for you in case this goes on for quite some time. But rates, we're in the mid two. They were in the mid twos, 3 weeks ago, and now they're in the high twos to low threes, and I think they're just waiting for all of this to pass. I do think that once we do get a little bit further into this, or a little bit past this, we will see rates go back down into the mid to low twos, and maybe that's the time you really consider switching your mortgage or refinancing or doing something along those lines. But in terms of would you refinance right now, I would say yes, if you need to try to build yourself a bit of a financial cushion or to pay off some debts or anything like that. But if you're just doing it for a kind of a rate swap, I might wait. Now, again, I don't want a crystal ball, but I do think that rates do need to go back down to where they should be relative to bond yields. But I mean, again, this is a time like no other, right?
Right. So, I mean, based on our conversation, I think like there was a period about a couple of weeks ago where the rates were actually really low and you could take advantage of it at that point in time, but that window almost has passed, right? What you're saying.
Yeah, so exactly that, right? So we were doing a lot of calculations for people, like I said, 2-3 weeks ago, where we were saying, okay, you know what? You're going to get a penalty for breaking your existing mortgage, but the interest savings that you were getting by dropping your rate down to 2 point some odd percent versus the 3 point some odd percent you currently have, the interest savings were significantly outweighing the penalty cost.
Right.
So again, we were just doing a lot of cost benefit analysis for people, but like I said, with the rates having gone up over the last couple of weeks, that window has somewhat closed. So I'm seeing the question there. Someone get that? What is the penalty to break your mortgage?
Yeah. So what we'll do,
Yes.
guys, feel free to type in questions, just for respect out of everybody's time. We'll deal with it at the end. If any of your questions aren't answered during our presentation, then by all means type it in and we'll ask it at the end. Yeah. So Andre is going to also provide us. So we have a Scotia mortgage deferral program, and or an example rather. So what we'll do is everybody who's on this call, we'll email them, and then they can have that information afterwards to look over if they need to. So Andre, thank you so much for that. Really appreciate your time, because I know you're fielding a lot of calls regularly now. So on the next segment, I guess what we'll do is we'll talk about sort of current market conditions, guys, because there's a lot of people wondering, is this a good time to buy? Is it a good time to sell? Is the market crashing and tanking? Because there's a lot of speculation out there right now and a lot of fear. So, I'm more, and I'm in that same boat too, because this is about our livelihood, right? And so we want to counsel our clients and give them good advice. So the way that we do that is really look at statistics. So what I'll do here is I'll just screen share with you guys what we found. Excuse me. So if you look at it, guys, so this is information about what's happening with the showings, okay? And so if you look at it, this is a month over month, the showing statistics. So this is February to March. So as of February to March, we're having showing statistics down by 22%. We're looking at the first half versus the second half of March. Sort of COVID sort of happened around mid-February. Let's call it February or March rather 14th. So you're seeing the first half to the second
half is actually down by 66%. And then the showing statistics, if you look at it, the final week of February compared to the final week of March, is down 77%. And so what it looks like, it's kind of doom and gloom out there, right? But what I would say is that the facts are that the showings are slowing down for sure, because people are worried, number one, if they should actually go out, and they don't want to go out and view property if they don't have to. There's also a lot of turmoil about what's going on in the market currently. So people are scared and nervous. So as far as the activity is concerned, though, what I was finding was actually there's a little bit more positive news. Let me just pull up that slide here. So this is sort of what's happened March 1st to the 14th. So if you look at the market right now, the total listings were 9,709. So in the first half of March, there was about 5,300 listings, and then there was about 4,400, so a total of that. And so in the first half, there was about 3,000 sales. And then in the second half of March, there was 2,241 sales. So if you look at the condos, what that means also is sort of the same thing, right? So you have a lot of listings at the beginning of the year, beginning of the month. At the end of the month, it sort of slowed down a little bit, but still relatively the same. That the freehold listings are relatively the same. The condo market in all of GTA is relatively the same. And there are actually sales that happened within the last 2 weeks during the COVID kind of like the not the peak of it, but when we're in full force and full effect. So all I would say to you is that, in relation to sales, is it actually happening out there? Yeah, absolutely. There's still sales going on. I think the market sort of projection is going to change over the next couple months. We won't actually have any real data about how it's impacting prices until probably the end of April, because this is so fresh. But what I'm seeing right now out of the properties that are actually selling are still very close to their asking price, but the multiple offers have started slowing down. And so if you look at it just as a comparison, so February 2020, here are the sales of the freeholds, of about 5,300. And then in March, there was about 3,000. And then in condo sales, there were 2,600. And then roughly, it actually went up in March. There was about 3,000 condo sales, okay? And so just to give you guys an idea of what's happened. So, in the GTA market, and we're talking today's Thursday. So since Sunday, there's been 203 sales and in freehold and 113 sales in condos. So I guess my point of all that is just to say that, listen, guys, the market is not tanking. We don't know how far or what the impact is long term. I think the markets probably will slow down a little bit, but I would say that if you still need to buy and you're at the cusp and you're a first-time buyer, for example, a month ago, you probably wouldn't have gotten into this market because it's so expensive and they were running into multiple offers. If the prices have softened up and you're not getting into multiple offers, maybe you can get into the market right now. And even if the prices come down, say 10%, you're still at least into a property whereby if in 2 months we're out of the peak and people are getting back into the market, there's a whole floodgate that's going to get released, and there's going to be multiple offers like crazy for people who are waiting on the sidelines to get back into the market. So if you do need to sell now too, because we're running into that situation where a lot of sellers have, bought a home earlier in January and February and now need to sell, there's definitely ways that you can do it safely. Showings are probably going to be a little bit slower right now, but there is still ways that, are selling, obviously, with statistics. So the other thing is that if you're an investor, this could be a good time as well, not to be opportunistic, but there are actually real people that have sold earlier this year that need some help to get out and sell their property so they can close on their new property. So, there could be a win-win out there. And so if you look at somebody who has a quick closing and that needs to sell, maybe the time that you can get the price a little bit at a down in order to help them in situation. So if they're still interested in real estate or even have questions about the market, by all means hit us up. What I'll do right now is we'll open up to any questions if people have any questions that we haven't answered. So, Andre, I think there was a question for you about breaking a mortgage.
Yeah, so that varies from lender to lender. If you have a variable rate, interest, but really it's a call you to them, and they'll give you the, depends on what your current rate is, how much you have left on your term. But it's a quick call you can make to your bank or your institution, and they'll give you that number over the phone.
Great. Yeah, and yeah, as it relates to that, I guess you have to look at like all the factors to determine if it's worthwhile for you to break that mortgage or not, or even go through the refinance, right? So you guys kind of calculate that cost differential and the savings differential for them, right? If they want to break or refi.
Yeah, and it's free to do the exercise cost benefit analysis. Really, all we're asking clients to do is call, get your current mortgage balance, get what your what your penalty is to break it. Provide us with that information. We'll do the calculations on our end, and we'll put them in front of you. And then, is it worth it to break it, or is it not? Where I would definitely keep an eye on things is when we do get past all of this and rates start dropping into the mid to low twos again, there's going to be opportunity, especially for those people who got their mortgages in 2018, early 2019. That's where we saw a lot of opportunities for people to switch out and save not just hundreds of dollars, it was thousands of dollars for a lot of people.
Wow. Okay, great. So if you guys have any other questions, and maybe some of the questions that you guys have and we haven't covered it, by all means, shoot send it over the chat, and then we'd love to answer that for you. What we'll do at the end of this webinar as well, like I said, I'll email everybody the Scotiabank example that Andre provided for us. And I think, as a final thought of really about the market and what's going on, we definitely want to help people through whatever they're going through right now. Cause I know that, a lot of people are in isolation, mentally it's very challenging for a lot of people. You're constantly getting bombarded with negative news, the death rates and all these kind of things. And so this might be a really good opportunity to actually, help out other people, and then also reflect in yourself as well. And I don't want to get all preachy, and I don't want to turn this into a sermon, but I think that, for me personally, I have a God out there that I draw into, and, that helps me through the anxious moments. As a business owner, as a husband, as a father, there's a lot of uncertainty, but I know that, my faith helped me get through all this kind of stuff. So, so maybe that might be helpful for you guys as well. If you guys want to explore, maybe there is somebody out there that can give you some more peace. And as an expression of that same faith, if you guys or any of your friends or family are going through something and we can help you, we're going to send you guys a resource page at the end of this webinar as well that will have links of how to get food delivered to you guys. If you guys maybe need some medical products or whatever, if there's anything that we can do as a team for you guys, we would love to support you and your neighbors. And I think that would be a great expression for us and our faith, but also to have a little bit of humanity in this as well. Because I know that if you're going through some dark times personally, the best way to get out of it is to actually think about somebody else and do something for others as well. Okay, so yeah, so I'm just reading if there's any other comments. Yes, Edward, boom, bump, man, we're in this together. So thank you guys. So just want to send out our love and appreciation to you guys. So thank you for joining in. And if you guys have any questions, feel free to email me or Andre. We'd love to provide information for you guys on a weekly basis. If there's any topics that you guys want to cover or at least get market updates, we'd love to hear from you. Okay, so thank you very much. We're also recording this, so everybody can get a recording of this afterwards as well. Thanks, guys. Thanks, Andre. Really appreciate it.
All right, thanks, guys.
Okay. Bye, guys.